What is going on, everyone? Welcome back to Sin City Crypto. My name is David, and we're joined with Robin. And today we are talking about the FOMC meeting, what Jerome Powell said, another rate hike coming in at 75 basis points, just as everyone expected. How are the markets reacting? What do we think will happen next? We'll get into that and much, much more. First, right off the bat, 75 points. A lot of people were projecting this. The CME was projecting it. Investors were braced for it. Are you surprised? Are you happy? Are you not happy? Was this the right move?
You know, it's like knowing you got a dentist appointment. It's coming, and you are not looking forward to it. And then you're sitting in the chair, and you're just like, damn, this sucks. And that's where we're at. We're in a situation where, you know what? It was a general consensus that we're going to 75 basis points. But at the same time, in the back of your mind, you were like, you know what? Maybe they'll change course. Maybe we'll get 0.5. Maybe we'll get a softer tone of what's to come. And, well, Jerome Powell did not fail to deliver the gruesome news of not only the 75 basis point hikes, but he also drove home the fact that, hey, we are not slowing down. He literally joked at he joked at the idea of pausing interest rate hikes in the near term. He literally was like, it is a premature thought. We will not be
He said
pausing.
extremely premature.
Exactly. So the question that he answered was, do you think that a pause is coming or on the table or a possibility? He said it is extremely premature to think that.
Well, he did pivot, actually. He did pivot. He pivoted from hawkish to more hawkish. So, all jokes aside, guys, a lot of people were calling his bluff, saying there's no way. Well, there is a way. The question is, what are we going to see moving forward? It's important to remember the ranking members who hold a vote in these FOMC meetings. They will change. 4 people will change next year. You're going to get 2 more dovish people, 2 more hawkish people. So about the same as what we're seeing now. But what will the macro environment be like? Are they going to continue hiking? You have some people on the FOMC board next year who have come out and publicly said, no matter what the situation is, whether we're in a recession, depression, inflation's high, jobs are low, they see the central bank, they do think the central bank should intervene if necessary in the markets, whether that's through quantitative easing or buying bonds or whatever the case may be. And so what are your thoughts? Let's take December first. Are we going to see 50? Are we going to see 75? Are we going to see nothing at all? Are we going to see 100? What are your initial thoughts? What are you speculating?
Okay, so my thoughts put aside here for a second. The general consensus, and I think you'll probably agree with me, was 75 basis points this month, followed by 50 the next month. I now do not believe this is what's going to happen. I think we got 75 coming next month as well. And
what if inflation data this month comes in at under 8%?
That'll be the big driving factor. So CPI went down 0.1%, 0.1% CPI went down. Remember, the reason they are raising these interest rates are to significantly reduce CPI from the 7% they're at now, 7.9, right? All the way down to 2%.
No, the number they take down to 2 is the core inflation.
Oh, is it the core inflation?
Yes, okay. Which is still at over 6%.
Yeah, so
there's a long way to go.
Yeah. So with that said, the one thing, so Jerome Powell came out swinging. One of the things he said right when he came out was that they've significantly reduced the balance sheet, which is debt, bonds, things of that nature. And so significantly reducing the balance sheet means they're not buying, they're not printing money, right? That's one. On top of that, they're also increasing interest rates, and they're staying the course. They ain't pivoting. There's no pivot at all. And then lastly, he referenced the job market. I think that was the most telling indicator of the direction that we're going. We've been talking about it for, the last couple months. Every time these jobs numbers come in and there's more job openings and the labor market's strong and wages are up, it gives ton of running room. There's tons of room to tighten that wrench when it comes to the Fed's policy. And so until, in my opinion, I don't think it's CPI, because CPI is not going to fall off a cliff, right? Do you think we're going to be at the 2%, 3%, 4%, even 5% within the next meeting? No.
The only catalyst I see to that would be the end to the war in Ukraine.
So you're thinking CPI, core inflation, is still going to be significantly elevated or a lot further away from their target. And so if that's the case, which we both believe it will be, if the labor numbers still keep coming in, it gives no excuse for the Fed to stop. And I think another 0.75 is going to come next December. And I think that one is going to have this December. Yeah. I think that one is going to have more implications, because I think people were just generally expecting the 0.5. And I think everyone was expecting 0.75 this time around. So if the consensus is 0.5 next month and they overshoot expectation with the 0.75, I think that might be the nail in the coffin. And also, you're going to have the end of holiday shopping, which, you do get a big push in retail and in sales during the holiday season. So that'll be over. And then basically you got nothing to look forward to until tax return checks comes back. And that's in February. And so if you can't afford to buy a house, where are you going to come up with a down payment for a house? First of all, the average home price in the last year went from $1,300 to $2,300, a rate increase of 80%. Your mortgage went up 80% if you were to buy a house 1 year ago and you're buy a house today. Let that sink in. And if you want to buy a house, generally you got to save money. Ain't nobody going to be able to save no money.
Especially now that interest rates are high. What you guys got to understand is this as well. Your credit card company can adjust your interest rate at any point in time. And so if it gets more expensive for them to borrow money, then guess what? It's going to get more expensive for you to borrow money in the form of credit cards. I want to take a look at a couple charts here. So the first thing we're going to take a look at is the Dixie, which is the dollar index. It measures the dollar against another basket of foreign currencies. Some of these include the euro, the Japanese yen, the Chinese yuan, so on and so forth. This is everything I'm showing is a 5-minute chart, okay? Dixie was all the way down to $110.5. It has ripped up to $100 and almost $12. That is not good for risk on assets, which includes Bitcoin. This is the NASDAQ chart, is currently down, I believe 1.82%. Again, this is the 5-minute chart. You see, we saw a massive drop down all the way from 10,900 all the way down to 10,700, which might not seem like a lot, but for the NASDAQ is a lot. That is billions and trillions of dollars being wiped off. And finally, the Dow Jones saw this massive red candle. And now we have been trending down. The last 5 candles on the 5-minute have been in the red, coming in at 32,257. And what is Bitcoin doing? Same thing. Bitcoin is tanking as well. Same thing, last 5 candles. But we do see a slight glimmer of hope here in the form of a hammer forming that just formed at the bottom of this lower trend. So we'll see if it'll reverse. But if the Dixie keeps ripping like it currently is, expect Bitcoin, expect the Dow Jones, and expect the NASDAQ and other risk on assets to deplete as well.
So what do you think? Okay, so last month with the Fed, it was kind of the same narrative last month, but you know what? It was kind of be expected they were going to have this hawkish tone last month. They were expecting a pivot. Now, last month, or last meeting, which was in September technically, end of September, approximately 40-something days ago, The markets bounced back pretty quickly. You had a big sell-off, and then in the same day you had a big rally. And do you think that we're gonna get a bounce back and a rally in the same way that we got last month, and also other months we've seen it, but not quite as significant as last month? Last month it was surprising. People were expecting a sell-off. We initially got it, very quick bounce back, and we were trending in the right direction. Do you think that's on the table? What do you think this week looks like in both the broader markets and in crypto and risk on assets?
I think I think the next big day, the next big number is the CPI number, and that comes out, I believe, next Wednesday. I could be wrong, but people know the Fed. Every time they come out, Jerome Powell has his press conference. He comes out and says, "We're staying the course. Price stability. Job market is good. As long as those narratives remain true, we're going to continue to see rate increases." But what I do think they're going to hit a wall, and that wall is going to be the global economy. It's going to be the amount of money it takes for the U.S. government to service their debt. And if they continue to let these bonds that the Federal Reserve had bought during the pandemic, if they continue to let them fall off the balance sheet and not replenish those, we're going to see a liquidity crisis. We're going to see the Fed possibly having to jump in, turn the money printers back on, help prop the bond market up, which in turn will make inflation worse. And you see where I'm going with this. It's a tough position we're in. But listen,
at some point the market's gonna break, right? I mean, they keep raising it 0.75. I mean, you think we're in a recession, right?
yes.
You think we go deeper in recession because of this and because of next month?
If all things remain true, the same, yes.
You think crypto goes further down?
Yes.
You think you don't think the bottom's in now?
I do think the bottom's in. I mean, from 20.5K to 17.5K, that's a, what is that, a 10%? No, about a 20%, about 15 to 20% lower price on Bitcoin, which would still mean the bottom is already in. 17.5 was the bottom.
I think my narrative, I think this next, by the end of the year, we reach the bottom. I think by the end of the year, I don't think it's going to go as low as people are predicting. This whole 12,000, 11,000, 10,000. I think that's off the table at this point. I think we've consolidated for long enough at 20. People are happy to scoop up Bitcoin at this price, and they'll be happy to scoop it up cheaper. But I do think that we are going to be testing the 15, 16K. I think we're going to bottom here soon. I think also NASDAQ, S&P
The stock
500.
market has definitely not bottomed. The NASDAQ, the S&P, the Dow Jones, those have not bottomed.
Well, when NASDAQ and S&P bottomed, so did Bitcoin right in the same time window. So if you think that the S&P 500 are going to bottom still, I mean, you look at history, crypto should too.
I think this time is different. But this is all speculation. And, as we get more information, as we get the CPI data coming out in the next few days, I believe a week or a couple of weeks, we will reevaluate where the markets are. So make sure you're subscribed to Sin City Crypto. Ping the notification bell. And on behalf of myself and Robin, that'll do it for this video. Come join us Monday through Friday at 10:30 a.m. Pacific Standard Time to 1:30 p.m. Eastern Standard Time for our daily live show. Until then, take care. We'll see you guys next time. Peace.